Stocks on Wall Street and the session mixed ahead of Fed's interest rate decision next week. Asian markets open lower. The GIFT Nifty is indicating a muted start for the Indian market. Crude prices edge up as Ukrainian strikes on Russian oil infrastructure stall peace negotiations. Coal prices hold steady as rising yields offset dollar weakness. The RBI is set to announce its monetary policy decision later today. 60% of the market participants expect a rate cut, while some expect central bank to keep the ammunition dry after the steep decline in rupee. Prime Minister Narendra Modi receives Russian President Vladimir Putin at the Palam airport as he arrives for his first state visit since the war in Ukraine. India to push for increasing pharma, agri and textile exports to cut the trade deficit with Russia. 10 intergovernmental agreements and 15 commercial deals likely to be inked. The Civil Aviation Ministry and the DGCA review Indigo's flight disruption and cancellations. The airline attributes the chaos to planning gaps in implementing the second phase of the revised flight duty time limitations. Airlines say more cancellations are expected for the next 2 to 3 days and seek time till February 10th to fully stabilize the operations. This comes after over 500 flights were cancelled yesterday. Hello, good morning. I'm Vinny Motiwala. You have tuned into Power Breakfast on CNBC TV 18. Thank you so much for tuning in as always. Looking at the markets yesterday, at least we stabbed that 4-day losing streak and we managed to close with that some bit of a green, about 26,000 mark was what the Nifty closed at. Indications from the US market, yes, we did see some bit of a positive move that came in the US markets, but Asian markets, that's indicating a bit of a muted start for the Indian markets as well. Look at the Taiwan index, that's down 0.2%. We have Hang Seng that's trading with cut of almost 0.5%. Nikkei is trading with sharper cuts in today's trading session of 1.5%. Shanghai trading with cuts of 0.3%. The only index which managing to hold on to that slight bit of a green today right now is ASX 200. That's also mild green, 0.06%. So that's also very muted. So Asian markets are indicating a very muted day that's come in here, and maybe the Nifty implied open like you can see on the screen, that was also a very muted start for the Indian market, 3-point decline. So we'll watch out for what happens today, whether we continue in terms of the momentum on the upside or we remain muted in a range bound trading session, given that we have a lot of events that are happening today, a lot of visits that have come in from the global front as well. So let's move on and talk about what's happening in terms of the impact for the Indian market, important cues that we're keeping an eye out on. We have a team of research to set you up for trade, tell you which are the important stocks to watch out for, as well as cues in the world of F&O. First up, let's go across to Holmans, who's here to tell us the key events, cues. What are we keeping an eye out on today? Good morning, Holmans. RBI surely there.
Good morning, Vinny. And of course, it's Friday today, but who would know that it's a Friday considering the important events lined up ahead of us? The RBI policy, the ITC hotels block deal, HUL trading exits, the ice cream business. We have the national events like the Prime Minister Modi meeting Russian President Putin, and of course, the international cues from the PCE inflation coming in later this evening. On a day as important as today, levels almost become futile, but on the positive side, the bulls did manage to defend 26,000 yesterday on the Nifty, and for the Nifty Bank as well, they managed to defend that 59,000 mark on the downside. Now, the markets will, of course, remain choppy for the first 45 minutes until the RBI decision is announced and then take a direction from there. We need to watch if it's a hawkish cut or it's a dovish cut. If there is a cut to begin with, and then take the market from there on. The recovery in the rupee yesterday is a very sharp recovery from the lows. We need to keep that on our radar as well. And of course, whether this results in the IT stocks cooling off, which have been the best performing index so far this week. Then, of course, the RBI policy keeps the rate sensitives in focus, so keep an eye out on autos, banks and realty. All of them are down for this week, but for now the GIFT Nifty on expected lines is indicating a very quiet start for our own markets.
Okay, quiet start for our own markets. Let's watch out for that. But let's move on, talk about important stocks that you should be keeping on your radar. Let's go across to Upasana for that. Good morning, Upasana.
Good Good morning, Vinny. First up, let me start with Reliance Industries. Now, S&P has upgraded the credit rating of the company to A- from BBB+ with a stable outlook. Next up is HUL, as mentioned by Hormaz as well. Today marks as the record day for the demerger of the ice cream business. Next up is Deepak Nitrite. The company's wholly owned subsidiary has commenced manufacturing operations in its nitric acid plant in Gujarat with a total capex of 515 crores. Next up is Tata Powers. The company expects operations at its Mundra unit to resume by 31st of December, is what they've indicated. RailTel also in focus on the back of the order win. The company's received work order worth 64 crores from Central Public Work Department. Next up is Zentech. The company's received orders worth 120 crore for supply of comprehensive training node from Ministry of Defence. CMEC also in focus as companies entered into a contract with HAL for offering charter hire for 5 years after the completion of statutory dry dock of the vessel, and the charter value is nearly about $43 million. Now, on the back of the block deal, let us look at the few stocks that will be in focus. According to sources on ITC Hotels, BAT unit is likely to sell 7% stake in the company, and the offer size is 2,998 crore with a floor price around 205 per share. And Brookfield India also in focus, according to sources, that Brookfield India QIP is likely to be launched with the issue size of 3,500 crore. So all in all, we'll be watching out for all these stocks in today's trading session.
Thank you so much for that, Upasna. But finally, let's go across to Sudarshan, who's here to tell us the cues in the world of F&O. What are we keeping an eye out on? Good morning, Sudarshan.
Good morning, Vinny. So we are getting a mixed trend from the F&O desk. If you take a look about the Nifty level, it has managed to protect 20 DMA, that is of 25,950 for second consecutive day. But the bad part is that FIs continue to build positions on the short side. So talking about the flows, so FIs, what they have done, they have reduced the positions in the index futures. They have sold almost 1,800 crore, but they have added positions in the stock futures where they have bought almost 1,900 crore. So it's kind of like offsetting each other. But now take a look at the longs. They have reduced the longs positions by 1,800 contracts. Now longs exposure reduced to 13% from the recent high of 18 to 19% that we had seen. On the short side, they have added the positions of more than 7,200 contracts, and now on the short side, the exposure has increased to 87%. On the options data, on the call side, 26,100 and 26,050. Both these call options have seen a big increase in the open interest. At the same time, premium 2 has risen. On the put side, 26,000 and 25,900 have seen an increase in the open interest, but at the same time, premium for both these put options has seen a fall. So support for Nifty remains around 20-day DMA, that is 20-day moving average of 25,970. Resistance remains around 26,300. For Nifty Bank, support would be 58,900. Resistance remains around 59,900. Two stocks are in the band. Saman Capital remains in the bank. Bandhan Bank has entered into the band. And some of the stocks that I'll keep an eye on, HDFC Life has been seeing fresh longs. Supreme Industries has seen fresh longs. And on the short side, Indigo has been seeing fresh shorts for the third consecutive day. And second one is Muthoot Finance.
Okay, Sudarshan, thank you so much for that. We'll keep an eye out on all those cues in the world of F&O as well. But moving on to that important event for today is the monetary policy of RBI. The announcement is due today. Ritu is going to get us what are we expecting this time. Ritu, over to you.
Will it or will it not? The decision of the Reserve Bank's Monetary Policy Committee has the street deeply divided. India's robust growth numbers for the second quarter are raising questions about the need for lower rates, despite the record low inflation opening up room for the MPC to cut rates. And the falling rupee is only complicating matters for RBI even more. Now, against this rather dramatic backdrop, the CNBC TV 18 poll shows a clear majority still leans towards easing. 60% of our respondents expect RBI to deliver a 25 basis point rate cut, while 40% believe that the committee will choose to hold. But even among those that are expecting a cut, the belief is that the easing cycle is going to be very short. A strong 60% say the cycle will end in December itself, while 30% expect one last move in February, while 10% think the cycle has already ended. Now, on the eventual landing point for these rates, the sentiment clusters around 5.25% as the likely terminal policy rate. 60% of the economists back that level. Another 30% expect the RBI to settle slightly higher higher at 5.5%, and only 10% see room for a deeper move to 5%. Now, as far as the macro forecast is concerned, with the economy expanding at a far faster clip than anticipated, 8% average for the first half of the year already, half the respondents believe RBI is going to upgrade its FY26 GDP outlook to 7.1 to 7.2%, and 40% expect an even sharper rise to more than 7.3%. Now, the confidence in growth comes alongside strong disinflation trends as well. So a decisive 90% of those polled expect that the RBI will lower its FY26 CPI projection to 2 to 2.5%, while the rest foresee a slightly deeper cut. Now, even if RBI cuts rates, respondents are very clear that the policy stance will remain neutral, but the tone, they say, may soften. 60% in fact expect a dovish message reflecting comfort on inflation. Now, as far as the rupee's recent weakness is concerned, most do not expect it to influence the decision, with 80% saying the currency will not impact the outcome and the central bank will remain focused on its inflation mandate with an eye on growth. Finally, the liquidity surplus has narrowed amid the tax outflows and RBI's intervention in the forex market. And from December to March, we also typically see cash withdrawals from the system. So the market expects RBI to communicate some liquidity easing measures, including the possibility of an operation twist or OMO purchases.
Okay, Ritu, thank you so much for highlighting those expectations there. But let's also listen to Timothy Moore of Goldman Sachs, who's sharing his view in terms of the outlook for the Indian market. Listen in.
We took a more conservative stance on India about 13 months ago because, recognizing the long-standing positive dynamics in terms of growth, the market got expensive at 25 times earnings, and we expected a cyclical downturn in the economy and then in earnings. Fast forward till today, we find that we have moderated valuation somewhat. It's still expensive, but we feel it deserves roughly a 20 times multiple given the growth prospects. But the key point is that the earnings downgrade cycle that we've been through has stabilized, and we're getting some modest earnings upgrades. So our observation is that we're through the earnings downgrade part of the problem. We now are looking forward to trend earnings growth over many years of 13 to 14%. And with foreign investors having sold $30 billion in the last year, which is the second largest on record in absolute terms and third largest relative to market cap, that now's the time to put your toe back in the water.
Okay, now let's move on and actually sip into a very short break. On the other side, we'll get you what's happening on Wall Street. Stay tuned in for that conversation. Welcome back to Power Breakfast on CNBC TV 18, and in the updates that we have coming in from the US market. Now, Wall Street ended Thursday's trading session mixed as investors look ahead of the Federal Reserve's meeting next week. When you see the Dow Jones that shed almost 30 points, while the S&P 500 and the Nasdaq actually extended some gains. Let's go across to CNBC's Steve Kovac, who's here to give us what happened on Wall Street.
U.S. markets were basically flat across the major indexes in Thursday's trading, as investors seem to be waiting on a December interest rate cut after the most recent jobs data. The Dow was down 32 points, the S&P 500 was up 7 points, and the tech-heavy Nasdaq gained 51 points. Jobless claims for last week came in well below the street's consensus and to the lowest level since September of 2022, which is counter to recent jobs data showing signs of increasing layoffs and a low hiring rate. And according to consulting firm Challenger Gray and Christmas, today layoff announcements this year have topped 1.1 million, the most since the pandemic hit in 2020. According to the CME FedWatch tool, markets have now priced in an 87% chance of an interest rate cut at next week's Fed meeting. Shares of Meta platform spiked 4% on Thursday after a Bloomberg report that CEO Mark Zuckerberg was looking to make big cuts to the resources it spends on the metaverse, with the cuts reportedly as high as 30% for the unit next year. Meta's Reality Labs division, which runs the metaverse unit and includes VR headsets and smart glasses, has reported $70 billion in losses since late 2020. However, a source tells CNBC Meta is just shifting investment from the metaverse into AI glasses and wearables and not decreasing overall spending. The reported move comes 4 years after Mark Zuckerberg renamed Facebook parent company to Meta, saying the metaverse was, quote, the next frontier. Since then, capital expenditures on AI have ramped up significantly. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that. But on that note, we're going to slip into a very short break. After the break, we'll get your cues in the world of commodities. Stay tuned in. Welcome back to Power Breakfast on CNBC TV 18. Now let's go across to Manisha, who is here to tell us which are the important cues in the world of commodities that we're keeping an eye out on this morning. Good morning, Manisha. Crude continues to be in focus, I think.
It does, Vinny. Thank you for that. Yes, 2-week highs coming in for the crude oil prices. We are headed for a weekly gain. And there is geopolitical risk premium that the markets are looking at right now. The street is anticipating a possible U.S. move in Venezuela after the U.S. president has signaled imminent action against the oil giant. The other is the lack of progress in U.S. talks with Moscow over the Ukraine war. The only thing that the street is looking at is the Asian demand and how the Saudi Arabia has lowered the crude prices for Asia to a 5-year lows. Having said that, when you look at the metals as a space, this is another week that we are closing in the positive. Gold and silver prices trading very close to their all-time highs, with silver clearly outperforming. And we also have seen stronger gains continuing for aluminum. Copper especially is trading very close to its all-time highs. There is lower output in Chile, planned cuts by Chinese smelters as well. That seems to be supporting copper. And aluminum is gained also because of the declining inventories.
Okay, Manisha, thank you so much for that. But now let's move on and talk about the important update that's come. That's Russian President Vladimir Putin has arrived in New Delhi for the 23rd India-Russia annual summit, and the optics were hard to miss. In an unusual break from protocol, Prime Minister Narendra Modi personally greeted Putin at the airport. The two leaders then travelled together in the same SUV to 7 Lok Kalyan Marg for a private dinner. Let's go across to Parikshit for more on this diplomatic gesture by PM Modi and what's on the agenda for today.
President Putin has arrived in New Delhi for the 23rd Russia-India annual summit. And we saw very strong optics at play. The moment President Putin got down from the aircraft, he was greeted by Prime Minister Narendra Modi, who had been waiting for him at the tarmac. Prime Minister had broken protocol and went to receive President Putin at the airport. Both leaders then travelled together in a white SUV, that is a white Toyota Fortuner, a Japanese-made car. They travelled together to 7 Lok Kalyan Marg, the Prime Minister's residence, for dinner. They were together at least for about 25 to 30 minutes in that SUV, away from the media glare and away from everyone's eyes. So they got time to have a very close and intimate interaction. They spent time over dinner as well. So President Putin managing to show everyone, people in the United States, Europe and the rest of the world, that he has a very strong ally in India. And Prime Minister Modi sent out the message that we treat every relationship on its own level and with its own merit, for that matter. Every relationship is separate and special for India. That is what Prime Minister Modi was trying to convey. Having said that, we see economic cooperation and trade to be a big focus for India during this visit and summit. We believe that Russia is going to take steps towards bridging the trade deficit. Remember, the trade between the two countries is around $68 billion and India's exports is just about $4.8 billion. So we want to export more pharmaceuticals, more textile products, more agro products, steel, marine products, including shrimp, to Russia. And Russia is expected to open up its market even further. Indian businesses, we're told, are likely to get a bigger market in Russia in the days and months to come. There is a migration and mobility partnership that the two countries will sign that will allow for movement of skilled professionals from India to Russia. A total of 10 intergovernmental agreements could be signed. There will be discussions on joint production, joint development of future defense platforms. There is a lot of conversation about the Su-57, about S-500s. We believe that Russia may pitch for all this very strongly. They may try and give us a very good deal, but India will not commit anything just yet. But we would like to explore a stronger defense partnership for the future. Technology, space, nuclear energy, all these will be major focus areas for the future.
Thank you so much for that. Meanwhile, in another important development that's come in, sources tell CNBC TV 18 that the US-led trade delegations will visit India next week for trade talks. Dates for the bilateral talks are being finalized, and we also understand that both sides remain hopeful of signing a framework deal by the end of 2025 to address tariffs. Remember, the last visit by the US delegations was in September. To more domestic updates that we have, and updates coming in on the aviation front, Indigo chaos continues at the airports across the country. Yesterday, Indigo announced cancellation of over 500 flights, and the most were from prime city of Delhi, Mumbai, Bangalore, as well as Hyderabad. The ministry and the regulator DGCA held a review meeting with the airline officials to seek explanation for the mass cancellations. The airline cited new rest rules for the crew and winter delays as prime reason for the cancellations. The airline also said that cancellations will continue for the next 2 to 3 days and that operations will stabilize only by February next year. Civil Aviation Minister expressed clear displeasure of the handling situation by the airline. He also stressed that ample preparatory time had been available to ensure seamless transition to the new regulatory requirements. Okay, and with that, it's an end to this edition of Power Breakfast. Thank you so much for tuning in. Up next to Bazaar Morning Call.